Hey everybody, it is Chuck Barone. Friday, September the 20th, 2024. Wrapping up a crazy freaking week. I gotta tell you, man, the craziest times ever. I was talking to a friend today, really clever real estate professional, owns a big real estate company, does a lot of buying and selling of real estate. I mean, we were both like scratching our heads saying, never seen anything like it. The craziest. Now we were talking real estate, of course, and it is really bananas because now it's like, okay, rates are coming down. Is that really going to save the day with prices where they are? So it's just we had a long chat about it. It was interesting because I guess I'm not the only one thinking this way, man. It's freaking nuts out there, guys. Anyway, before I get rambling, let me take a half a second. Welcome everybody to the show. And as always, thanks, guys. Appreciate your support so much. I can't tell you how much it means to keep everybody heat going. And it's my screw up today, guys. I apologize. I was setting up the show. I usually get everything set up, and at 2 o'clock, I set it up and put it out so the notifications go out. Today, I set everything up, camera, boom, boom, script, everything's good. I know what I want to talk about, timer, boom, forgot to type it in and push the button. So I don't think we got notifications out today because by the time I realized that error was about 2:45. I don't think that's enough time for YouTube to get notifications out. But we're going to talk to the people we have here, the few people on the chat here. Good to see you guys. And everybody else will have to catch the replay video over the weekend. So anyway, let's get into the show a little bit. So we saw a crazy freaking week, right, guys? Stock market's at record highs, man. Everybody, things in the economy seem, depending on where you are, especially in the political or environment we're in right now, where you have, one party really trying to make it like the entire economy is shit, which isn't true. The other side trying to make it like everything's just beautiful and wonderful, which isn't true. There's this economy is kind of a weird one, I guess, depending on where you are in this economy. I mean, there's some people doing really well, go figure. And there's some other people, mostly mortgage guys, not doing real well at all. I mean, it's just been super quiet. It is what it is. Now, the good news for the mortgage guys and mortgage professionals like myself, now we're moving into refi season. So it's going to be busy, busy, busy as everybody that bought houses at these higher rates going to look to get down to about 6 and then below as rates continually move down. So it's going to get a little bit better for real estate, I think. Refi, mortgage real estate. We'll see if lower rates will bring. I'm sure what's going to happen is you're going to bring first-time buyers back in, sniffing around, seeing if they can qualify, seeing what's available for what kind of payments. And I think what happens, though, guys, and my fear is that once rates come down, now here comes a flood of people that want to buy houses. Supply is a little bit better, but it's certainly what I would call robust right now. I just think that it might lead to another round of price increases to make up the slack. If you have, how it works, right? If you have more people selling houses than buying houses, the buyer has the advantage. Usually prices come down, concessions get made. If you have more demand, buyers than sellers, supply, well, now the seller has the upper hand. And that's when we saw the insanity of people paying above appraised value for houses and buying houses sight unseen and waiving appraisals and waiving freaking inspections and everything else. So it's just been the weirdest, craziest time. I mean, 2008 was wild. It really was nuts because the market was go, 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 right? But there was none of this weirdness. What they gave us programs where people could, the idea of it, subprime. Okay, here's the story of subprime. It was basically 100% financing, and that's why it was super attractive. Plus, all you needed was good credit to get it. You didn't have to do tons of paperwork and a whole bunch of bullshit. And the idea of those subprime loans because you're only going to keep them for a short time, 2 or 3 years. And then you're going to now over that time, those 2 or 3 years, you've built some equity and you've demonstrated a payment history on paying mortgages. So your credit score is probably better, and your mortgage history is good, and now you're going to just refi that loan into a typical conventional loan, and it worked great till it didn't. And so that was just straightforward. What we're having now is just the wildest stuff ever, these mad swings. And, we didn't have institutional buyers in the real estate market back then. We didn't have the BlackRock Stones and the Pinnacles and the rest of them in here buying entire developments. Now, back in those days, everybody was selling everything, right? And it's just wild, man. But so what have we seen? We saw rates ultra low, buyers stampeding in, paying above appraised value, and then we saw the brakes get hit. Boom, man! The car screeches to a halt, and when everything went up, and now buyers can't qualify at all. So they couldn't qualify before because they couldn't pay a premium above appraised value, which always had to be paid in cash. Couldn't make that and the down payment. Now they can't qualify for the regular house payment because rates are high and prices are high. Anyway, we know this market, hopefully I'll still be breathing when real estate gets back to normal. Because normally real estate's pretty quiet business. Prices go up somewhere between 1% and 5% a year. Usually it's slower building, right? Usually rates aren't moving and people aren't watching rates like people do now. People buy houses. Now the percentages of investment properties in neighborhoods is just outrageous, man. It's used to be, one out of just so many. Now it's a lot of them. Some places, the majority, man, especially in condos, townhouses. A lot of those are investment properties. That's why you can't get government loans on. So anyway, I ramble about real estate, but it is the craziest times ever. But let's talk about today's markets, today's stock market. So today was a weird day in the stock market too. The Dow Jones breaks the record. So yesterday we had the NASDAQ and the S&P at record highs, breaking records. Today, the Dow catches up. It breaks its record up 38 points, 42,063 points on the Dow Jones. 42,000, guys. Wow. NASDAQ falls, so down 65 points today. 17,948 on the NASDAQ, still an amazing number. The S&P down 11 points today, 5,702. So stocks still at super lofty levels, just off record highs for both of those indexes. The Dow now at a record high. Happy weekend, everybody, right? I mean, stock market looking great, man. Bond market today kind of settling down. People actually buying bonds today. Yields coming down, not very much. The 10-year down 1 basis point, 3.73%. The 2-year also down 1 basis point, 3.59%. So you got 14 basis point difference. The yield curve back to normal. Now that's between 2 and 10, back to normal. If you get down here to the even shorter term stuff, now it's kind of weird. It's a U-shape kind of thing. But anyway, for our purposes of our discussion, it's the regular Treasury bond market. And today that was quiet. The dollar today rallies up. Go figure, man. Up 7 basis points. 100.74 on the index. Go dollar. Hang in there. Not much of a move. That was a quiet day everywhere. But gold and silver had good days. Gold up $34.40. Listen to this number, guys. $2,620.50. Yeah, baby. $2,620, guys. Silver up 33 cents. $31.08 on silver. Now, silver, that was the one that had me going crazy because I couldn't believe it really wasn't charging up like it has now over the past few days, especially. I really want to see silver settle down a little bit now, though. I don't want it to go from 28 and can barely get to 30 to 35. That's probably not going to be sustainable, guys. So let's see silver kind of settle down and consolidate here, build up some strength above $30. Then we move on to 35 and 40. Oil today, not much, down 18 cents per barrel, $71.77, right in the trough where we expect it to be. We kind of have had oil, have nailed oil pretty much over the last year or so, I guess. Bitcoin today falls just a little bit, down $424, 62,764 for Bitcoin. Seems like Bitcoin more and more is following the NASDAQ, guys. Bitcoin, if NASDAQ's up, typically it looks like Bitcoin is. Strange. I'm gonna have to watch that and kind of look at their chart side by side and see if is that something new or how long has that been going on. It's interesting to see that. But good news for Bitcoin holders, staying well above 60,000. This is the way you want to see it consolidate: up, down, up, down, up, down, but never below 60,000. Bitcoin doing well. All right, so let's talk about stuff, right? So today was a weird day today, guys. I'm not sure if you guys are familiar with all this, but today was what they call on Wall Street triple witching day. Triple witching day. And what that means, it's kind of a spooky sounding phrase, right? But what that means is it's basically a big options thing, right? So options on stocks expire they quarterly, right? So options on stocks, options on indexes, and futures on indexes all expiring today. So it's a big jam up, and there's a mad scramble because options, tough business options are 90% of them, or maybe not that high, but most of them expire worthless. So there's a lot of mad scrambling, not only in the options market, but in the stock market as they try to move stocks to hit strike prices on options, right? A lot of times, not only the stock being kind of pushed, not only by the traders on Wall Street, but by the actual management teams who own options and want to cash those options in, right? So triple witching, usually a very, very volatile day, a very, very wow, sometimes bad things happen. Today was like a firecracker where you light the wick and it's just a big dud, nothing burger. So triple witching. See you next quarter, guys. Powell, interesting take on some of Powell's commentary, guys. He said that the Powell and the Fed recalibrate. Great word, man. He used kind of several ways of saying that. Recalibrating policy course from tightening to loosening. Now the question is this going to be good for the stock market? History says it's kind of a crapshoot, guys. Most of the time when the Fed cuts rates, especially larger cuts like we got yesterday, half a point cut, those larger cuts are typically a reaction to market conditions. Something big happens, right? Stock market freaks out, big unemployment, signs of big layoffs or recession. That spurs the Fed on to go ahead and cut rates to revive the economy, the sector, or stimulate, right? Now, this time it's kind of a weird one because we had a very big cut with no signs of either big cuts of unemployment, right, or a recession anywhere on the horizon, guys. Do you see that? Do you see it? So we're moving into somewhat weird kind of uncharted territory. I can't remember the time where the economy is going super well and they cut rates a half a point into that. It's really strange. Now we got the big question. I think we can be truthful and say that, this larger cut along with the economy like we're having right now could spur more inflation. Now, they didn't come out and raise the flag and declare victory over inflation, but they kind of implied it by cutting rates as aggressively as they did. Now, if this cut into a decent economy, which is only going to strengthen that economy, If that sparks more inflation, then what? Now the Fed's going to have to start going to rate the cut they gave. They're going to come and take it right back. I don't know if that's going to end well and how people would react to that today. But this is like deja vu in 70s and 80s, where the Fed cut rates too soon, inflation came back, and what we saw then, I don't know if it will be the same this time. What we saw then was inflation came back even harder than it was. Like revenge for being stupid or something like that, I think. I don't know. So, interesting stuff. I think that, we don't want to get anywhere near like what happened in the 70s and 80s, where it took them freaking 10 years to get rid of this problem. Powell and those guys have done a pretty good job right now. I just hope that they're not screwing it up, like letting that fish off the hook right before you get him in the boat. Because if inflation comes back, here's what you're looking at. GDP now, I looked today, says GDP growth for the third quarter, which will end the end of this month and end of September, 3%. So that's the best quarter so far this year if it actually comes in at 3%, showing the economy is doing freaking good. Okay. Now, the last 3 times they cut, and they cut more than a quarter, gigantic bear market, big recession. So it's just, we get to see it all. We get to sit back and watch it. Hopefully you guys are all set up for that. Defensive position in stocks, still making those dividends nicely, paying down debt, doing the right thing with your money. We're going to get bargains sooner or later, man. We're going to get those bargains. I guarantee that. Anyway, that's it for the day, guys. Let's get out of here early. It's Friday. Everybody go on. Have a good weekend. I apologize for not getting it up in time and getting the notifications out. Very quiet on the chat today, but good to see you guys who did make it. I appreciate all of you guys being here. Have a great weekend, man. NFL, college, family, football, barbecue, cold beer, relax, get away from the madness for a little bit. Friends and family. Back on Monday. Bills don't play till Monday. So I get to do the show on Monday, and then I get to go watch the Bills game. Go Bills. Anyway, that's it for the week. It for the Friday. It for the week. Back on Monday. Bring you the news you need. Everybody have an awesome weekend. Till Monday, everybody. Take care.